This session is going to be between Philippe Botteri and the partner at Accel and Nicolas Autret, the investment director at Samsung Catalyst Fund. Let me start by introducing Philippe. He joined Accel in 2011 and focuses on cloud applications, security, and online marketplaces. He led Accel's investments in DocuSign, Algolia, Doctolib, Blablacar, PeopleDoc, UiPath, and more recently Snyk and Chainalysis. He is also on the board of Fiverr and worked closely with the team at Crowdstrike. Prior to Accel, Philippe was with Bessemer, based in Menlo Park, where he helped build the firm's cloud practice, working on investments including Cornerstone OnDemand, Eloqua, and Criteo. He started his career with McKinsey&Co. He is from Paris and graduated from École Polytechnique, where he is a member of the Entrepreneurship Advisory Board, and with École de Mines as well. So that is Philippe. And next, he is going to be interviewed or in conversation with Nicolas Autret, who is the investment director at Samsung Catalyst Fund. Nicolas is part of Samsung's Electronics Evergreen Multi-Stage Venture Fund that invests in the new data economy and strategic ideas for Samsung's mobile device solutions and consumer electronics groups. Investment spans across automotive, robotics, digital health, Internet of Things, and AI, cloud infrastructure, as well as device-level solutions. He is also based in Paris. Formerly, Nicolas served as a general partner of the venture firm 360 Degrees Capital Partners, where he led investments in early-stage startups throughout Europe. His experience include investment roles for Sofinova Partners and operating roles with the corporate dev and strategy groups in Orange, North America, as well as business development positions at Leguide Group and Twenga Solutions. So please welcome Philippe and Nicolas. Take it away, Nicolas.
Rajiv, thank you very much for the kind words of introduction. Philippe, good afternoon. Great to have you with us today, and thank you very much for taking the time. So I guess how are you doing, and how are you surviving these odd times?
Very happy to be here today. I mean, things are restarting in Europe right now. So I was actually able to go to Paris to see a company a couple of weeks ago. And now pretty much it's it's possible to go into any European country, except that when I'm back in London, there is a 14-day quarantine. So hopefully it's not going to last too long, but it doesn't prevent us to go and meet companies. And one thing I would say is that after 3 months of Zoom, you tend to forget all the things you can get from an in-person meeting. And I think like when I was in Paris 10 days ago, spending 6 hours with a team of entrepreneurs, I realized how much I was missing just doing my Zoom. But we continue to be quite active. We actually done 2 deals during this period that were entirely done on Zoom. So we continue to be very active in the market.
Great to hear. And before we dive into the session, which will be about how to take a company global and how to scale, maybe a couple of housekeeping items for the audience. We want this session to be as interactive as possible, so feel free to ask your questions on the chat like you did in the session prior. So Philippe, as mentioned as introduced by Rajiv, you're a partner at Accel. You're based in London, and we all know Accel because it's such an iconic VC firm globally, founded in the 80s, and you've been behind many of the key successes, both in consumer businesses, but also in enterprise sector. Some companies you backed, we can mention a few. I think Facebook, Spotify, Supercell, Dropbox, and others. So companies that essentially we come across pretty much every day. And you personally, you've invested in a few unicorns, Blablacar, UiPath, Doctolib, DocuSign, or Algolia. So, in a nutshell, I think you and Accel, you have a track record identifying and investing in companies that have the potential to become global category leaders. And I guess the first question I have for you today is, how do you spot these companies? What are the key ingredients that you want to find in an entrepreneur, in a founding team, or in a company to trigger an investment with the hope that it will eventually scale and become a global company?
Sure, it's a good question. I mean, I wish I had the formula, but there is no science. I think for me, it all starts with the founding team. I think great companies emerge because of great founders, and that's why I think all these meetings in person are very important, because at the end of the day, it's all about the founders and their vision and their ability basically to create the culture and motivate their team and hire the best people to achieve that vision. And that's what we are looking for in the team that we back. And one thing I would say which helps is that if I look at several of the companies that I've invested in and have been successful, actually had the chance to know the founding team from 12 to 24 months actually before investing. And I think building that relationship over time, being able to see the progress and I think on both sides make things much easier when the time is right. Then the other thing I think is obviously critical is about the market opportunity, and I think one thing which is, I mean, you've all heard the story about consulting firm explaining why the market for cell phone is going to be super small, right? And the thing about the opportunities we're looking for, they are creating their own markets usually, and so you can't look at the market. I mean, if I look at RPA, for example, like when you look at the market size of RPA, UiPath was $5 million in revenue when we invested. And the RPA market didn't exist. Like you look at analyst report and we're saying, the RPA market is like 100 million a year globally. And you're like, who is going to invest in a 100 million a year market, right? It just doesn't make any sense. But you have to look beyond that, and you have to look at the product and the technology and see what can it transform? Like how can it affect companies and people going forward? And if it does, then is this going to be something that is going to be very large or not? And I think that's a bet we took. I mean, we saw in UiPath that the automation of all the tasks that people were doing in the enterprise was something that was, could basically impact companies of any size and across all sectors. And you look at it and you say, wow, it's going to be massive. And that's probably what explained like the explosive growth of the company. It was such a pent-up demand for it, but it was not materialized in the analyst reports. Another example, if you take Doctolib, for example, and they started with a booking management system for doctors in France. I mean, in France, you have around 500,000, 500,000 doctors and paramedical functions. And if you look at this and you're like, okay, well then, if each of them is paying like 1,000, 1,500, you've got, $500 million to $1 billion market. And that's pretty, it's good, but it's not huge. But then when you look at it with a different angle and you think about all the healthcare spends, and the fact that Europe is actually if you took at healthcare and the IT spend, it's hugely underpenetrated compared to other countries like the US. And then suddenly you see that there is a massive opportunity. You will have to build your product portfolio and expand across, a couple of additional countries, and suddenly it's a big market. So I think these for me are kind of the two critical things, and obviously having the product that can disrupt this market and differentiate is, obviously super important.
Right. So spotting founding teams early on, building the relationship on the long run, sharing the vision of the founding team, and then eventually, once the time is right, pulling the trigger on an investment. That's how you proceed. So, talking about scaling, once you have materialized the investment, I guess the first thing that comes to mind when we talk about scaling is international expansion. Let's say you have a product, you have a domestic market where you play in, you have trial tested and proven your product with a few customers and had a few customer success and experiencing maybe a bit of attraction. And now you're talking about taking your product and your company across the globe or cross borders, maybe to start with. So I guess the quick question, and maybe lesson learned for our audience today is when to kick that effort. When is the time right to do this, and how to do it? And do you see eventually difference between B2C and B2B companies when you want to scale globally?
Yeah, no, I think so. That's an interesting question, and I think it depends where you're starting from and what kind of businesses you're in. So, I mean, just to the people who are listening, if you can just type in the chat box which country you're from, where you're based, just to see, to give me a feel of where you guys are. I think as I answer the question, will be helpful. So if you look at the different type of businesses, so let's take a company like Blablacar, for example, which is kind of a consumer marketplace for long distance travel. So for the people who are not familiar with the company, it's basically you're driving from Paris to Lyon. It's a 5-hour drive, and you're alone in your car. You sell 3 seats on the marketplace, and I can buy the ticket and jump on the seat, and you pick me up in Paris, drop me in Lyon. So if you think about a business a marketplace like this, I mean, the one thing you want before you expand internationally is just make sure that the flywheel is is working. That means that you can balance the two sides of the marketplace and manage to to grow them at the same pace and make sure that whatever marketing spend you're investing translates also into an organic growth. I think that's for me. I think once you've demonstrated that, you can say, well, okay, now I've got something working in my home country. And I can see, in the chat box, people from all the world here.
All over the world, so absolutely.
And I think whether you're in Singapore, in Indonesia, or San Francisco, I think you just make sure that your model can work locally. And it doesn't need to have a huge scale, but I would say for BlaBlaCar, it was around 1 million member and around 10,000 ride a day. That's where they were when they decided to go international. And then at that point, you can say, well, where does it make sense to go next? And I think my advice, for that kind of consumer business, you just don't try to go too broad too fast. I think you need to make sure that the product is actually adapted to the local language, that you understand how the messaging is going to work, and you need to have the proper team in place. And I think hiring that head of country is the most critical hire, and that's where companies fail usually, right? What they do is they hire the wrong person. They work at it for 8 months. They realize it's not working. They realize it's not the right person. They have to fire the entire team, rehire the team, and they have to do it again, and they lose like 8 to 12 months. So I would say that focusing on the right hire, have that hire spend 3-4 months in the home team to really get the culture and the values and the know-how of the business, and then go back to the country. And when the product is ready, and hire a local team. I think to me that's how it works. And when you start that things are kind of working, and you can probably spot that earlier based on your experience, then it's time to expand in the next country. But just going too broad, too fast, and see what works, and then shutting down half of the country may not be the best approach. Now, if you're a B2B business, that's a very different approach, because then it really depends where you start from. I mean, if like a lot of people in this audience, you're based in the US, I mean, the US market is where you want to be if you're an enterprise software company. And you need to make sure that you can start to develop some form of leadership in your category before thinking about going abroad. And typically, in my experience, that's about $1 million of revenue per month. So kind of a 10, 12 million run rate. That's when you start to reach that scale, that's when you can start thinking about where do I go next. And typically from the US, where you go first is, in the UK, same language, easier to localize. And then from there, you kind of make your way into France, Germany, and the Nordics, which are kind of the top 3 countries. The Nordics being smaller, but it's also a country where actually all the UK messaging and language resonates well. You don't need to localize it, because in the Nordics, people are very used to English a lot more than they would in France or Germany from a business standpoint. Now, if you're a software company and you're based elsewhere, then that's different. I think I see some people here are in Israel, and I think if you're in Israel, there is no point really in starting to develop your sales in Israel, because it's it's kind of a small market. It does make sense to have a couple of alpha customers that you can be close and help you develop the product, but then you have to start your go-to-market in the US. And then the question for you is, do you need to start in New York or San Francisco? And I would say the answer is just follow your customers and your ecosystem. Like if you're selling large banks, New York probably makes most sense. There's less time difference. If you need to be really connected into the tech ecosystem of the Valley, then San Francisco makes more sense. And then if you're in a kind of a hybrid model like a Doctolib, so for those who don't know, Doctolib, it's booking management systems for doctors. So doctors are paying for the service on a subscription basis, and then they have a portal where consumer can go and find their doctors and book an appointment. So here, in this kind of business, it's kind of a B2B business on one hand, but also there is a B2C component with the marketplace. And in this kind of hybrid situation where I would say the objective is getting a significant market share for this kind of services. You need to be 50% plus market share in a country. And then basically you don't need to be in 50 countries, but you need to pick 2 or 3 big adjacent countries and develop your business there. And so the right time to actually go and expand is when you, similar to Blablacar, when you have actually a solid grasp on your home country. And because there is no value in being number 2 in 2 countries, you'd better be number 1 in 1. So you only take the risk to move out when you're a clear number 1 in your own country, and there is no competition, no one that can actually catch up.
Take over.
So
absolutely.
That's how I would think about it. I mean, another thing which is interesting for, in particular for consumer businesses, is to think about acqui-hires. As I mentioned, hiring this first hire in the country is really critical. And if there is a small startup already in the country where you want to go, founders are actually great people to start a country. And the value proposition that you give to them is, you're trying to raise $500,000, $1 million seed fund. So you're talking about small teams of 3-4 people. And you tell them, you know what, we just raised 20, we have a lot of cash, we're going to give you all the cash you need, all the support, and you can achieve your vision much faster. Because at the end of the day, what founders want, I mean, they start a company because they have a vision in mind. And if you can give them something that's going to accelerate this vision, I mean, the achievement of this vision, then that works usually well. And Blablacar made several acqui-hires. So we actually, when we invested in Blablacar, we mapped the entire European landscape and found a team in Italy, in Poland, and in Russia, and kind of made the introduction. And over the next couple of years, actually Blablacar acquired them and started and started the business there, and it was quite successful.
Any tips on hiring the right country manager for our audience here? Do you have investors or board members involved in interviewing that person? And I guess what you also mentioned is having that person spend a period of time in the home office, in the headquarters, to get used to the product, to the teams, develop the network internally is a must-have. But how investors and board members are involved in the hiring of these country managers who are key to the international expansion?
Yeah, I think the right profile is someone who is kind of an entrepreneur at heart. Like taking someone from a larger company, someone who is used to run, large team, is not what you want. You want someone who is scrappy, someone who has a lot of this entrepreneurship quality, working super hard, just trying to do with what they have, not always ask for more, and trying to basically find their way through cash and investment. Some people who basically I'm used to do a lot with not much. I mean, this is what you want to find.
Right.
You also want to find people with the right culture. I think culture is super important. And you want to make sure, like any hire in the company, that person is going to embody really the culture of the company. I mean, something that may sound obvious, but you want someone from the country. And I've seen several founders think, well, for Spain, I've got, there's a French company saying I've got this French person.
Amazing Dutch.
Yeah, he has been living in Spain for like 15 years. His wife is Spanish and he speaks Spanish very well, blah, blah. He's a perfect hire. He can do the bridge. To me, that's not the right trade-off. I think if you want to start a business in Spain, you need someone who is native from Spain. If you want to start in Germany, someone who is native in Germany. I'm not saying that other profile can't work. I'm just trying to share what's going to maximize your chance of success from my experience.
Right. Makes sense. And so, when we talk about scaling, so one avenue is go international. The other one, if you want to scale, can be about product diversification. Essentially, you have a core offering with which you have some success, and you upsell or you cross-sell your base of customers with additional offers, services, products, whatever. I think, in your portfolio, you have a few examples of that. I think Blablacar, Doctolib, or UiPath, I think are good examples of such a strategy, which gives an additional avenue of growth. So any lessons learned there that you can share? Key things to pay attention, pitfalls to avoid when you explore product diversification.
Yeah, I mean, if you look at all the what makes the difference between a good company and a great company is their ability to become a platform and not just a product company. I mean, if you look at companies like Uber, they have their ride-sharing service, which is already a huge market. So you could say, well, let's stop and just only do that. But if you look at what they've done, they've always tried to add new layers of product, because at some point, whatever your market size, at some point you're going to top out. And you want to be able to think about the next generation of products and make sure that the growth of that next generation of product is going to be driving the growth of the business before actually the first product start to tail off, because otherwise you have a small product growing fast and a big product growing slow. And so the net is that it takes a lot of time before your company can actually go back to a high growth rate. So if I look at the companies I've been involved with, Blablacar being, a good one. I mean, they started just with their long distance transportation marketplace, which was, by itself, I mean, there are 700 million trips long distance trips in France. So that's already a big market. So they took that model, expanded it internationally. But their real ambition was not to be the marketplace for ride sharing. Their ambition is to basically own road transportation. So they started with one segment. Then they've always been thinking about the daily commute and how to crack this. And it took some time before the technology was actually there. But a couple of years ago, they launched Blablacar Lines, which has really helped a lot, especially in the past in the past few months. They've added buses. As buses were deregulated, they actually launched their own bus offering, which is operated through a same sort of marketplace. More recently, they've just launched a partnership with the e-scooter company Voi, where Voi is operating, and they help them with the branding and the expansion. So they really think about just how can we help people use road transportation in a multimodal way, and then that's, I think, how they like massively expanded their market. I mean, I think Doctolib is another example. I mentioned, earlier started as just a booking system, and then they added video conferencing for doctors. And they're slowly building up all the stack, the IT stack that medical practices and doctors, will do need. And then suddenly they go from just being a booking platform to being an operating systems for for the doctor and these medical practices. I mean, UiPath is another example where they started with just simple robots to automate some tasks, and now they're making them available in the cloud. They're looking at process mining, and they're really becoming the platform to automate the enterprise, and taking leadership in this category. So you always have to start somewhere, but what matters is really what is the overall vision and mission of the company, and making sure that vision, mission is broad enough so that you can expand to adjacent area where you have significant synergies.
Yeah, so maybe diving, on that topic of vision, maybe elaborating more about culture, company culture, which is a word you touched upon earlier. As the company scales, you add more teams, product teams, sales teams, customer success teams, you have local teams, of course you have your development teams as well. So how do you develop a corporate culture where employees feel empowered and accountable, and how do you spread this culture across multiple locations with employees with diverse backgrounds? How any tips you can share for our audience today?
Sure. So first, I would say that I think the role of culture, in startups and tech companies is super important, because at the end of the day, I mean, the team is basically the group of people who is tasked to achieve, the vision, right? And for this to be successful, you want people to be really driven by that mission. And that's what they think about when they wake up in the morning, and that's what drives them during the day. So making sure that all your team understand why you're doing what you're doing, and what is the greater good that they achieve by doing this. This is how basically you motivate people. And then that's the first thing, being mission driven. And then you have the different values that you put around it, which kind of define the framework that people will use to achieve that vision. And they are, in some respect, the guardrails and the enabler. And they are super important, and they vary by company. Every company is different. There is not one set of culture that makes a company successful, but every successful company has a defined set of culture and values. And one thing that I've observed is that when companies start and they there's up to 30 people, 40 people. Kind of the founding team is pretty much hired everyone. They've seen everyone, and kind of everyone sees them, and kind of the culture and value can be communicated this way. But as soon as you go beyond that, then the founding team is not hiring people anymore, and then there starts to be people who are not reporting to the founder, not working directly with the founder, just the first line. And think about it as dilution of value. Every time you go down one level in the organization, you dilute the value. And then the question becomes, how do you make sure that when you're 500 people or 1,000 people, like the last hire still understand the values of the company? And for that, I think, for me, one thing that I've seen working is just companies that put a specific focus and emphasis on this value by formalizing them and communicating them very often. I mean, most of the successful companies I've seen had in their office, written on the walls, in every conference room, their values. Not all their values, can be one value here, one value there, but people are constantly reminded about these values. And that's what guides the way you work. I mean, like when you work, you always are facing uncertainty and you're wondering, oh, should I go right or should I go left? And then, you look at the wall and you see the value of the company and you're like, okay, now I should definitely go right, like that. And you shouldn't, like founders shouldn't underestimate actually the benefit of having all these values on the wall, on stickers.
Right.
Because at the end of the day, that's what makes them leave, and that's what makes what guide, I think, their team in terms of executing around them.
Right. Any advice on organizing all hands sessions where top management shares with the rest of the employees any significant news or the latest updates on the business or major contract wins or things like that, where as a way to keep in touch between the newest employees and the management, and again to share the vision and have people embrace that vision? Is that a good thing to do, or any other tips you can share from a pure operational perspective that you've seen in your portfolio companies, things that founding teams or management teams to do to maintain, nurture, develop that corporate culture?
Yeah, so I think there are two elements around this. I mean, there is the element of culture, and I talk about that, and then the other element, which is super important, which is the alignment. I think where you see company fails is the lack of alignment in the organization. So some groups are going to target A, while other groups are going to target B. And you see that if you're not perfectly aligned between kind of your product, your R&D, your engineering, your product team, your marketing team, your product marketing, your sales, you can't be successful. Like a company can only be successful if all these functions are perfectly aligned, know where they're going, they know who they're selling to, they know why they're doing what they're doing, and this is super important. And so the role of the processes that you put in place to ensure this alignment is what makes or break a company. And when you're 10 people or 15 people in the company, it doesn't matter. You know everyone talk to each other. When you're 400 people in a company, suddenly you can start to see silos and you can start to see this alignment breaking. And then marketing generating leads, but not the leads that the salespeople want, and the salespeople actually trying to sell the product to the wrong audience, because the product marketing is actually targeting a different audience. I mean, it sounds obvious, but like, you see this in company, and it's really across the lack of processes and lack of leadership. And so as a founder, I would say, you need to think about how do you align people at all the different levels of the organization. I mean, it starts, at the executive committee, and then making sure that you have, offsites for the different layer of the organization. And then the whole end that you mentioned, I think, is also something that is very important. Now, in terms of role frequency, how it shapes, I mean, I've seen company having a lot of success by bringing the company together for a couple of days. I think that works pretty much up to 300 people. I think when you're above 300 people, then it starts to be very expensive and you start to lose some of the benefits. So you need to think about what is the right formula beyond that. And every company has a different answer. But obviously that's very important. That's just one part, I think, of the alignment that needs to happen within the organization. Right.
Super interesting. So we talked about international expansion. We talked about product diversification. We talked about team, corporate culture, organization. One thing that also is probably required to scale is capital funding. Any tips that you would share with our audience today when it comes to preparing your next round of funding? And back to my point you made earlier, when at the very beginning of the conversation, when you said we like to build these relationships over time and to follow founders for a period of time before eventually triggering an investment. Is that a tip you would share with founders here today, which is to engage very early on with VCs, get to know them, have them get to know you, and then eventually facilitate the next round? Or any other tips you'd like to share?
Yeah, so I mean, this is, I think, a very good point. I think the best time to catch up with VCs is when you don't need to raise money. And there's a couple of benefits. One is it takes off the pressure on the discussion of getting to a yes or no in a short period of time. And then the second benefit is that if the VC is interested, he will push the discussion. If he's not, he will tell you hopefully what he wants to see to be interested. And then over time, it gives the third benefit of having more experience. I mean, when you think about investing in a company, as a board member and investor, you're going to stay and work with the company for 8 years. And as a founder, it's the same. You're going to work with an investor for 8 years. So you need to make sure that this is the right person and that you can work with that person over a long period of time. And so that period, I think, is quite important. Now, you don't always have the luxury of doing that. So if you don't, then it means you just need to make sure you spend a significant amount of time with the investor that you select, just to make sure that this is gonna work out. And it's as much selling and buying on each side. So I think that's something which is quite important. I mean, another tip. Another tip I would give to companies right now who are in the process of fundraising or thinking about fundraising in the coming months is I would really work hard on the value proposition and the ROI that you offer to your customers. I think the economic situation for the next 12, 18 months, I think is very uncertain. There's very high chance that we'll have a deep financial crisis, or at least that budgets and IT budgets are going to be tight. And in this context, you want to be the number one project that they're going to choose. You don't want to be the number 10. And the number one project is the one where the return on investment is going to be very, very quick. So you want to make sure that as you position your product, you can build that ROI calculator and give a quick back of the envelope on the dollars that your customers are going to save. And it's not possible for every product, but I would really encourage you to think hard, because usually there are ways to do it, even if they're not obvious. And that's what's going to get through this project through procurement, especially for large companies.
Right. So maybe we'll discuss some of the ideas and topics that get you excited today. One more question, maybe on the funding side. So assuming that you have assembled a good syndicate of investors, comes the question of board of directors or advisory board as well, which can be different bodies. Any advice on picking independent board members to really add value to the board discussions, and also any tips for our audience on how to structure efficiently board discussions? It can be about defining the right set of KPIs, frequency of reporting, etc. These are topics that we slightly touched upon in the previous sessions, but would be curious to also hear your thoughts on these ones.
Sure. So, in terms of adding independence, typically I like to add an independent when I join a company at the early stage. It's usually a good balance between the investor and the founders. And in terms of picking the right person, it's all about what you're solving for, right? And so I would encourage you to think about what is the expertise that you don't have right now at this stage of the company. Is it, is it more on the product side, right? Is it more on the go-to-market execution? Is it, on the finance side, even though that's typically more for later stage company, when you start thinking about having an audit chair, so at the early stage is less helpful. But it could be about marketing, product marketing. So you really need to think about what is the gap that you have, and then try to find a board member who can fill this gap, and someone who is used to work with company at this size. There's no point in taking the CMO of a multi-billion-dollar company, even if he is interested, if you're a 10-people company. Like, you need to have the right fit in terms of size and experience, and also someone who has the time to dedicate to the company, and just not someone who is trying to add the board membership to his resume. I think that's very important. But that's also where I think if you pick the right investors, they have a network of people and can make these introductions, and then you can pick the best person.
I have one more question for you, and then maybe we can turn to the audience. I think we have a few questions that came from the audience, and Rajiv will probably turn them to you. One question for you, which has nothing to do with a topic of scaling up, which is more about what gets you excited today. The new ideas eventually that come out of this situation that we're going through today, or trends, acceleration of trends you've been monitoring for quite some time, that you see in specific geographies or specific sectors, and that you as a firm, either in Europe or globally, you'd like to invest in or start investing in?
Yeah, no, that's a good question. There's several things which got me very optimistic and excited in the past few months. The first one was when I saw, kind of the maturity and reactivity of the founders getting into this, this crisis and this environment. Across all our portfolio, we saw founders reacting very quickly, moving, full remote, reorganizing their, their team and their processes, readjusting their cost base. Compared to what I saw in 2008, I would say that the reaction of the founding team was much faster. And this may be linked to the fact that the crisis in 2008 was more Wall Street crisis than Main Street, and it was Main Street crisis, so it was less obvious. And here people could really see the impact on the street. But overall, I think it's also a different generation of entrepreneur, and I was really pleasantly surprised and very humbled by how these founding teams reacted. So that got me, I think, very optimistic. The second thing that really gets me excited right now is just like with COVID, in 2 months, we went to 2 or 3 years of digital transformation. Like, this has been a massive acceleration for several of our companies. And even though from an economic standpoint, there's going to be a lot of issues going forward with most governments spinning up, debt and lots of businesses have been shut down for 2 months. Some of them are never going to reopen. I think from a tech side, I would say that we've been somehow isolated and spared, and some businesses selling to areas that are more impacted, like if you sell to small businesses, etc. I mean, this is tougher if you're, if you're in travel and people are not traveling, that's obviously harder. But for a lot of the core software companies, in collaboration, automation, all the companies that fueling the digital transformation, I mean, there's been like a very positive boost. And a lot of companies have continued to hire. And even for the company where there was a slowdown in the past few months, now in Europe, we're starting to see that things are actually reopening quite fast. So yeah, I mean, this is what gets me excited right now.
Great. So, on these optimistic remarks, I'm going to turn to Rajiv. I think, Rajiv, you received a few questions from the audience for Philippe.
Yes, thank you, Nicolas, and thank you, Philippe. Both of you covered such a broad spectrum of elements for startups, entrepreneurs, and business. So I think we'll have some great questions to follow up. There's one from Mohammed Farhani. Mohammed, would you like to ask the question directly? There you go.
Yeah, hello. Hi. Thank you so much, Philippe, for the great points that you mentioned. It was quite useful. So I'm co-founder of Sepure. So in Sepure, we make like chemical resistant nanofiltration membranes that can be used for food, pharma, petrochemical, and oil refinery applications. So it's a hardware device that we sell. It's a B2B business. We are based in Singapore, and for us, the market in Southeast Asia is okay, but it's not the biggest market. We have bigger markets in North America and also South America when, there are so many pharmaceuticals in North America, a lot of oil refineries, as well as pharmaceutical companies and vegetable oil companies. We also have a big market in China. So for all type of company, which place you think it's good idea to expand first? And another question is when is good time for us to think about the expansion? So we are at seed stage of startup, scaling up our product with our industrial partners. So we still haven't have any product in the market that we can actually produce at mass scale. So yeah, these are my questions. Thank you.
Yeah, so good question. So I mean, it's a very specific market, between the U.S., South America and China, I think it's hard to answer the question not knowing the market. But what I would encourage you to do is just understand first what is the real kind of defensibility of the product. Because if you go to China, I don't know how long you're going to be able to conserve your IP.
Can I add one comment on the defense? So basically the product itself cannot be copied easily. So after we make it and we sell it, they cannot just take the product and copy.
Okay, well, if you think that your product is very defensible, then, but that, I mean, that's great. But that's one of the thing I would really think about. I mean, typically when you don't have the production capacity ready, I think I always find it quite helpful to find a customer who can take you to one of this geography first, right? It's easier to start, if you work with a subsidiary of one of the big Chinese of American or South American company, work with them locally, and then have them take you to their home market. And I think once you start to have 2 or 3 of them, then that kind of gives you local references, and then you can expand it. So to some extent, if the 3 markets are equal in terms of, defensibility, differentiation, market size, I would be opportunistic, and I would just try to see where can you find local customers that can bring you to these markets and leverage that, as case studies and references to actually expand.
Thank you so much.
You're welcome.
Thank you, Mohammed. Thank you, Philippe. We have another question from KK, and she is with a startup called Sati in India. And her question is, again, on prioritization of their products for the specific markets. They are a consumer product, CPG, healthcare specific. And so, what advice would you give for them to expand into the right market? And also across different countries in Europe. They also have IP that they have filed in the US and Europe.
And I'm sorry, what kind of product it is?
It is I believe it's a sustainable sanitary pad product that they're bringing to market.
Good. Well, I mean, I would say that it is usually the same amount of work to start in a small country or in a big country. And so, I would rather go for the biggest country first because, the sunk cost of having to hire a local team, find your way into the market, localize, is not very much different if you go, to Italy or if you go to the US. And so if you look at the markets, I would say I would look at, is your product, what is the value proposition of your product? Does this value proposition, how does it apply in the current market? What is the size of this market? And then when you put everything and there are other criteria, of course, you can think about, and then when you put everything together, just go for the biggest market because, you're going to get a lot more out of it.
There's another question from Joy. Joy, would you like to directly ask your question?
Sure, happy to do that. So our company makes diagnostic tests that can precisely target antibiotic use. So as we begin to scale globally, we're entering partnerships with animal health and nutrition companies that have kind of companion products to our diagnostics. And I'm wondering what tips you have for ensuring success in those agreements, aside from some clauses that we're putting in place where the sales rep bonus is directly tied to, a component of that is tied to sales of our product.
Yeah, I mean, I think you're pointing out to the number one thing is just for it to work, you need to make sure that the salesperson doesn't makes the same money if he sells $1 of your product or $1 of his company product. I mean, this is the number one rule, because if he's making less, then he's not going to sell your product, or he's only going to sell it if you really have to. And I think that's pretty hard to achieve. But if your product is really strategic, I think it works. And so you need to find the partners for which this strategic interest is super high. Now, the other thing I would think about is, I mean, selling through partners is kind of a two-pronged sale, and it takes time. It takes time because you need first to educate the partner, and then the partner needs to educate the customers and the market. And so I would be thinking, if you launch a partnership in a specific country, what can you do directly to start educating this market and sell directly to some of the customers to create some of the momentum first? Because, I mean, direct sales can help you grow probably like 2 or 3x faster than the channel. So if you want to achieve high growth, it's hard to just rely on one channel. It can happen. I mean, if I've seen software companies with an OEM relationship with SAP that really made the company because you have the power of SAP Salesforce, and the product was driving a very strategic product for SAP, and so then that works. But if it's just one product among 100 in what the rep can sell, even if he has full component, it can be challenging to achieve the velocity that you want, for a startup.
Yeah, it depends on country. So we do go direct in some countries, but in some others, that's more costly for us. And we find that there's been a halo effect of the increase in sales in some of our core markets on the other market segments, the other countries where we're not as well suited to have a presence.
Yeah, no, that makes sense. I mean, the other thing I've seen on such partnership agreement is also correlate, give some warrants in the company based on the success. So they achieve a certain threshold in terms of units sold, then suddenly they vest some warrants in the company. And so that is a way to strengthen the relationship. And if the product is really strategic, that's something which should interest, I think, the partner.
Actually, one of our partners is looking at investing as well as distributing, and so I'm interested in any advice you have on, the existing investors don't want. They're happy to have that partner involved, but they don't want them to have anything that a current investor wouldn't. And so where we put that warrant structure, that's been a part of the discussion around a distribution agreement, is if they exceed a level that we have or go beyond a level that we have in our projections, they get some additional kickers.
Good. Yeah, I think that's a good thing.
Yeah.
Nice.
Thank you, Joy. And Philippe, I had another question based on some of our prior sessions. When you look at the startups that are in the XTC, at some point they're looking for growth and scale. So what are some of the elements of risk that you come to your mind to manage in that growth phase?
Yeah, I think for me, I've observed one thing which really can make or break, a company when they're, as they're scaling. And this is the ability of the company to move from a founder-led company to an executive committee-led company. And the risk is, I think, more acute for founding teams where you have, 2 or 3 founders who have used to work together for a long time. They take all the decisions together, and they, if they keep doing this for too long, then they're not going to scale. And at some point, founders to some extent are not equal anymore. Like this is, company can now, there are exceptions, but most companies where you have co-CEOs, like we've seen this at Atlassian, but in most companies, at some point you have a CEO and then you have an executive committee, and you can't have 3 people in the executive committee making all the decisions and not the others. And so the founders need to find their place, and they can be CTO, they can be CPO, they can be head of sales, whatever. But there needs to be this differentiation, and there needs to be a recognition at some point that the decisions are taken as an executive committee and not as a founding team. And that, I think, that transition happens where I think typically the company is 150 people. I think beyond that, you really need to start to hire the strong execs and not just have direct report to the founders or VPs who are actually one level below the founders. And the founding team needs to realize that, even though you're a founder, if you're a CTO, well, they're going to be a CRO, and he's going to have a say in the decision on how to move the company forward, even if he wasn't a founder. To me, I would say that this is the number one thing where I've seen companies basically maybe not fail, but like lose a year or 18 months because of that, because they haven't been able to hire and attract the right talents. Because if you want to hire someone senior and they realize that everything is done between 3 people, they're not going to be interested. Like the key talents you want to hire at the exco level, they want to have a say, and they want to be part of the discussion, and they need to feel that the founders are actually open. And it's, if you're 3 founders, hiring that first 4th person, like this is the most challenging thing. But once you've done it, then going from 4 to 5 to 6 and 7 is, becomes easier and easier over time.
Thank you, Philippe, for laying that out. And actually, we are now at the top of the hour. That hour went pretty quickly with the range of things that were covered. So thank you so much, Philippe and Nicolas. Philippe, if any of the startups would like to get in touch with you or with Accel, what's the good way to do that?
Well, I think typing right now my email, so people can send me an email there.
Fantastic.
Great. Philippe, thank you so much. You've been super gracious with your time, and thanks a lot for all the insights you shared today. Really, really appreciated that. So thanks a lot. And
welcome. My pleasure.